Intro in the pod or trying to pick me up at the bar after you've had like 20
I don't mind this being the intro.
That should be on the.
I don't mind rolling right into it. So
Armand's sick. I'm pumped up and watching Big Short clips this whole time while we've been prepping, and he comes with, "Hi, welcome to the podcast."
Welcome to the podcast.
I can't believe that's what you came with after the Jenga Tower scene.
So we have a lot to talk about today. That was a good laugh to just kind of get things rolling. Something about Michael Saylor, apparently. Is that correct, Stephen?
We're gonna talk about a lot of stuff today. It's been a bit of a light news week again, but we're
gonna explore the question: can Michael Saylor, the ultimate boss, and other bosses get liquidated?
Yeah, you think you've seen liquidations now? What's looming?
Can he? Is it even possible?
Or anybody else?
Today at 5 p.m.
Oh, God. Well, the fact that now BlockFi is...
verge of bankruptcy.
Oh,
what happened with Gemini today? Is Gemini also? Or
I want to get into that, but first we have to talk about Armand's lack of sleep.
yes. Yes.
So you just came back from a trip.
I just came back from Australia, and I face planted into my bed, and I haven't left since I got here.
You can't tell at all, don't worry.
Literally haven't left. And I honestly think I'm only here because I was able to get enough good sleep. I mean, I was sleeping on a not okay.
Well, you're back on your 8 sleep.
Yeah. But I was on a very not okay mattress, and it's hard because you can't leave home with it.
Yeah, shill me, daddy.
Well, you're the one that shilled me first.
I did. I shilled all of you that bed.
Okay, I remember the first time you ever told me or anyone about it, and I had heard of the chili pad. Do you remember the chili pad?
Yeah,
Chili pads. Chili pads is the Cardano of mattress toppers.
It really is.
Yeah,
because it's only got half of the features that the 8 Sleep has, right? And some people that have it are that in and of itself is great. But if you have the choice, 8 Sleep is just a way better product. And 8 Sleep just brought out the 3, which is the one I got. I don't know what the difference is between yours and mine, but yeah, there's the 3, baby. Upgrade it. Okay, but the pitch you gave me, do you remember it?
No, I blackout when I give these sales pitches, but apparently they're pretty good because I sold a lot of these.
Let's get you to blackout again and sell Nick and Eric and everybody listening on a fucking 8 Sleep pod or mattress, and then we'll all celebrate. We'll all celebrate and talk about it in the Discord. Tell me.
Oh, is this my sales pitch?
Yes, this is your pitch.
Oh, I wasn't prepared for this. It's the second favorite thing I own besides my dog.
That's compelling. That's big.
Yeah, I really love my dog.
It was in your top purchases list, yes?
It was my top purchases list, yeah. It was my top purchase of 2021 for sure. Well, no, second top purchase behind the piano. But that's still pretty good. I like the piano a lot.
And why is it your favorite? What makes it so special?
Never thought I'd be interviewed about my my mattress topper. Well, I'm a shitty sleeper. I need perfect. I have an eye mask. I have absolutely no light. I need to have the rain sound on, no noise. Yeah, it's really bad. Princess in the Pea, how she can feel the pee under 100 mattresses. That's me. I have a sleep range of plus or minus 0.4 degrees. And if I go outside of that, I wake up in the middle of the night. It's very bad. So yeah, it's been a lifesaver for me. That's why I shield it all to you relentlessly.
Did you sleep when we were on the mountain a few months ago? Did you sleep in the tent?
No.
What about in Joshua Tree, in an Airbnb, mind you? This is a room that you had.
No, I also didn't sleep there. As a rule, I don't sleep unless I'm home.
The main thing that got me was when Steven told me it's temperature controlled. So this is a fucking high technology topper or mattress. It's a topper or a mattress. And we've already talked about this a lot, but the reason I'm bringing it up is because I promised people that I would give them a code for a discount on our behalf. So that's what I have today.
I'll take a code.
Well, we'll see. So I have a code. Alfalfa is the code, and it's also Black Friday. So I've been telling people in real life and on the pod that if you're gonna buy an 8 Sleep, obviously this is when you buy it. You buy it Black Friday, you get the best discount plus the extra discount for buying it through us, Alfalfa. So the reason I went for it, and this is my like lackluster, I'm sick attempt at describing it, the temperature control. So my wife sleeps at like 100 degrees on one side, and I sleep at like 67, 66. And that's a -6 in the old model, according to your temperature control. It's like an ice sheet. But that's the way I sleep. And it spends the first week learning how you want your temperature, because what you don't realize is the temperature of your body changes throughout the night. Some people get colder, some people get hotter. And then the way they finish, they want to either finish like warm, like they're in a fucking little blanket.
I like that
or
too.
like cold, because it kind of like pushes them to get up out of bed. There are so many features. Not just that, but like the Oura Ring I have, the sleep tracking, it already has sleep tracking. It literally measures your heart rate, your HRV, measures when you get in and out of bed. So you're getting sleep tracking in addition to the fact that it does all the temperature control.
So the version that you have, is that like a one side of the bed pad? Because Erica doesn't want to have the cold sleeping.
No, each side is individually controlled.
Oh, it goes across the,
It goes across
spans
the whole thing. Yeah,
globe.
yeah. So I just have like a king topper, and each side is independently controlled.
Interesting.
Yeah. And in San Diego, it was like hot as hell during the summer. And like it helped because you didn't have to have the AC like blaring.
Does it heat if you wanted to?
Yeah.
Oh my
Yeah.
god.
I forget the range, but I think it's something like 55.
It's too cold and too hot.
Yeah. You can't reach it's like 55 to 100.
Yeah, why
Like 60 to
blast the
100.
AC or the heater in your whole house when you just have this thing on your bed
Yeah.
while you're sleeping? It's
I mean,
no-brainer.
I've never slept better. I'm so much more aware of my sleep in general and like the inputs that create better sleep for me, which is kind of a good and bad thing, because I'll realize like, oh, okay, that extra drink like caused my like heart rate to be higher than it should have or whatever.
That
But
extra one.
it's
one.
phenomenal. So how do I get you to get one?
I got the code already.
All right.
Black Friday. What's the deal? What's the deal on Black Friday?
I don't know. I don't know, but I know that they had, the way I got my brother to get one is they have a 30-day trial.
Oh.
So like, you know.
Does our
was like, all right, I'll
code-
get one.
Does our code stack on top of Black Friday price?
Yeah, I believe so.
Damn.
I believe so. Yeah.
Well,
So there you go. Yeah, there's so many things I could talk about. Maybe when my brain is back, I'll mention them on the next episode. But I do know that there's a 30-day trial. And actually, when I bought it too, I was like, okay, is this a real one where they charge you at the end or not? And no, you can literally just like ship the whole thing back. And yeah, sleep has never been better in my life. I personally swear by it.
Nice.
Good. Super happy for you.
Thank you. Thank you. So that's it, right?
Yeah.
Oh, the link will be below if you want to check it out for Black Friday. This is pretty much our first sponsor, guys. So check it out. Link will be below in the description, and the code is Alfalfa.
All right, let's get into some stuff.
Alfalfa round.
Oh yeah, sorry, I got lost in
It's okay.
Armand's voice. Just putting me to sleep over here.
Chilling sleep.
I didn't do anything, so my everything's all standard, same. It was last week for me. So
Nothing for you?
No,
Yeah, I mean,
good.
I heard a couple of interesting snippets this week. I was listening to Forward Guidance Pod, good pod if you like macro, which I do. They're talking about how there could be some interesting flows this December because the current state of the 60-40 bond portfolio, where everything is down bad, is going to create an environment where retirement plans actually have to do a lot of selling and distributions
To rebalance?
To rebalance, yeah.
starting on December 6th. Yes, they're sort of in violation of their fiduciary duties if they don't do these particular things.
Well, yeah, I think as I'm just pondering this, it's like, well, equities down hard, bonds down hard. You know, I don't know what kind of rebalancing.
yeah, how much
this would be.
rebalancing are we talking about? Both are down bad.
No, it's worse when they're both down.
But if they're both down equally, still 60-40.
It's not necessarily about like rebalancing the portfolio. They
Okay.
have to do like protect some selling to excuse me. You guys check it out. It's with Zed Francis of Convexity, Convexa. I don't know. It's just some play on words with convexity. But yeah. So we had this in 2018 as well. Apparently,
Oh, I remember that.
There was a lot of just crazy selling. We had quite the sell off, and then what happens is the retirees get their checks, and then they just put it right back into the market typically. So the market apparently on Christmas Eve just went whoop
That whole December timeframe in 2018 was wild.
But what was it like? Down or up?
down, way down,
No,
and
it
then
was
massive
super
reversal
down,
of
but
Santa
then,
Claus.
within the month, it was like I remember
we
like
were down bad.
scrambling to hedge everything, and then it was like, oh, it all just reversed on me. Fuck. Like I remember December 18.
Okay.
Yeah, so we could be setting up for that pretty good right now because we're already pretty up there, and then it's going to be bam, retirement pension flows selling, bam, CPI print, bam, FOMC. I mean, we could get hit pretty hard. Plus all the net liquidity flows.
Well, how does net liquidity tie into this? I think there's offsetting variables going on.
Yeah,
So,
we talked about it last money episode, excuse me. The TGA is draining a couple $100 billion.
pumping liquidity in.
No, taking it out. They were at like 500 something billion. They said they're going to end the year at 700 billion. So
we've
turn it out.
been positive though for the last month. There's been money
exactly
flowing
There has-
on in,
But
but that's set to reverse
But
allegedly.
if they stick to their refunding announcement, which they usually do, they want to end with 700 billion in the account, which means they're going to pull
When
liquidity
is that
out.
end of the year?
Yes,
Time frame?
December 31st time frame.
Okay.
So we're setting up for a net liquidity drain. You also have the 95 billion, getting sucked away from the Fed balance sheet.
And that's monthly.
Yeah, and then the reverse repo facility, if you kind of just like pull back from like previous months, it's adding 45 billion a month, but net down.
Net down.
Net from here to the end of the year down, but also Q1. This kind of what you just brought up kind of matches up with like in Q1. It looks like it could go up because the Yellen said she's going to basically bring the balance back down to 500 billion. So you can see that 200 billion go back into the splash pool.
Cool.
In Q1. So
Yeah, it looks like we're setting up where if you are feeling pretty good about 2021, you may get some pretty good buys.
2021.
Excuse me, Q1 2023.
Gotcha.
2021 already happened, Nick.
Correct.
Oh man, like
I like how you threw that back on me. Gaslighted the fuck out of me just there.
goodbye.
Idiot.
Oh, man.
Yeah, you may have some favorable prices and then reversing liquidity dynamics coming into Q1 next
Have you
year.
seen this and going back to our like trader, like hodler to trader episode, which was many ago, but like Steve and I were talking about technical analysis, and I like poo-pooed technical analysis the entire time. But like if I'm looking at the charts now, it looks like we are in this like descending band, right? And right now on the S&P and the NASDAQ, we seem to be near the high end of that descending band.
Channel?
Yeah, that channel. Sorry, I don't speak this language. So
You don't do astrology?
yeah, so
Astrology for men.
we're at the high end of this channel, and the NASDAQ is like butting right up against the 200-day moving average. I'm looking at it from like a wider perspective, which is like the economy is getting worse. We are highly valued, like in many asset classes. I think crypto has many cryptos have no reason to hold them whatsoever, and they're still worth billions of dollars. Like I'm short this market, and I'm not oblivious to the fact that we can have a mild pump at any point, but like I'm comfortable being short this market, and I think like my alfalfa round is I'm short almost like across the board.
What are you shorting? You shorting stocks?
I'm shorting shit tech and shit coins, and I think like that's been kind of a theme for this whole year. But I you know what? Here's something I did. I shorted ETH yesterday. Ooh, first time ever.
Good short.
First time ever.
Yeah, me too.
Your beloved.
My beloved. I shorted ETH for the first time ever, and it was a hedge because I like sold so many fucking puts that I like got myself overexposed on the downside. I was like, I need to hedge this out. But like that short trade on ETH has actually worked out, and like Goldilocks zone for me is if ETH ends this month at like 1,001. That would be perfect.
You might get your wish.
Yeah,
It's a pretty juicy level. Anybody else have any juicy moves they want to share? Otherwise, we can just kind of hit the headlines. Yeah, so big stuff happened obviously last week FTX blew up, and it's been a soap opera that we've been watching like unfold right in front of us. We're like, wait, what's happening? Crazy text, orgies allegedly, methamphetamine abuse. I mean, it's wild. This morning, the big news
people,
is that,
by the way, first of all, people, by the way, that have never done Adderall are calling it methamphetamine abuse. Come on now. Like, you guys never went to college? Give me a break. Methamphetamine abuse.
No, he was doing some
literally
pharmaceutical grade
Okay,
shit.
he was doing a Parkinson's drug that
Parkinson's drug.
it's like a patch you put on your arm, and the side effects are like excessive gambling and horniness. And look what happened.
Sure enough.
Haven't you seen his dime piece? He's got these.
Carolyn?
Yeah, dude. It's gonna need some energy.
Parkinson's drug for the bull market.
All right. Caroline's got an interesting blog.
Oh, I read that.
Her Tumblr.
A lot of
You know what? Like, if that wasn't coming from her, I'd like be kind of like, okay, this is fucking pretty rad, actually.
she seems kind of based, even though she lost everybody's money.
Haven't looked at it to that level to know that.
I wish you were chiming on this conversation because that blog is fucking.
I've seen snippets.
The blog
it's her
is
Tumblr, right?
Yeah, it's just so. She definitely takes a take. You know, there's no like wishy-washiness.
Yeah, we should just do a life episode around Carolyn's
blog.
main takeaways from Carolyn's blog, polyamory and a whole bunch of other fun stuff in there.
Chinese harems.
I don't even know what a Chinese harem is, but I'm guessing it's something Armand does.
Nice way out of that one.
Anyway, so more crap happened this morning. I mean, you guys saw Genesis had a call at 8 a.m. saying they were halting withdrawals, no liquidity for withdrawals. Genesis is like a huge lender in the space. I think a lot of these companies that have like earn programs, which needs to be rebranded to lose programs. They sort of just plug into Genesis, I think, who's doing this lending behind the scenes. There's a lot of speculation that they were caught up in the FTX crash, and it looks like they were.
So what was this program? You were seeking yield, but then the platform was giving the money FTX to earn the yield.
You give your money to Gemini, they give you X%. Gemini then gives your money to Genesis, and Genesis gives Gemini X plus 1%. And then Genesis then lends out that money out to like Three Arrows Capital, name your favorite hedge fund.
It's only a problem if their counterparty loses all the money.
Right. So they were a trusted counterparty. They are no longer.
Yeah,
naturally.
And like much like the FTX house, which at times seems was just like this like tangled web of body parts that were just like kind of like so too is like the
beautiful image,
the contagion in the crypto system right now. Like we don't know who Genesis was like sleeping with, and we don't know who like it's just like it's all over the place, and this is starting.
That's why when people
unwind
ask
right
me
now,
like what's safe, I'm like nothing's safe.
Wallets are safe. Your wallet, you put your ETH in a cold storage wallet. I mean, it'll go down in price, but you won't use it.
Notably,
75%.
Notably, ledger sales all-time highs.
Really?
Last few weeks.
I saw
Yesterday was the
7x,
largest.
Good.
7x normal.
Yeah.
Good. This is
Long-lived
what should have
DeFi.
happened.
It's good. Maybe this is like long-term bullish in a sick sadistic sort of way,
In like an effective altruism way, where like we'll talk about that next episode.
You can't. I don't think you can get widespread mainstream adoption on this idea of just like self-sovereignty, cold storage wallets. But like that's for another.
You definitely can't.
For another pod.
Not with the technology where it is today.
No, hell no.
No. Dude, I was shaking when I was setting up my ledger.
Right.
Like,
it's just
no one's going to do that.
It's
It is complicated, but like so was the web in 1996.
Exactly.
We'll move past it. We'll build out infrastructure.
Right.
Okay.
It'll be fine. Back to Genesis though, the other kind of huge thing that could be tied into that is GBTC, Grayscale Bitcoin Trust. I mean, last I checked, this gigantic scam was trading at like a 40% discount, I think, to the asset values, which means like, for
Roth IRA down bad.
Yeah, same, brother.
like, so Bitcoin's like 16K right now. I think it's trading at like a $7,000 value
it's about
in
10K.
Serious?
Yeah.
It's that down.
Yeah.
Yeah, it's not. It's
40%.
It's minus 41% to the net
the
asset
actual
value.
price.
I think Grayscale is just collecting, I think, just tens
2%.
of thousands of
Yeah.
Bitcoin and fees
And
every
the
year.
craziest part is that
for managing it.
so like in this Contagion episode where like, all these, centralized exchanges, other platforms are like coming out and saying like, hey, here's exactly what we do. Here's how we manage your funds. Grayscale's been like silent, and Barry Silbert silent.
Barry ain't saying shit.
Well, last time he said shit was the top of the market. It's like gonna be a big week.
Gonna be a big year.
It's gonna be berry to berry, peak to trough. This whole fucking cycle.
Right.
But anyway, like going back to like where those yields come from, like there were hedge funds playing the ARB game with GBTC, and so that was like their main collateral. I think they were maybe borrowing against. So when you see this discount decreasing, it means that those people are scared. They're selling to get liquidity. They don't want to sell that. They're forced sellers of GBTC, and that discount is decreasing. So not a good sign behind the scenes. I think it's like a good leading indicator of what's to come.
Leading indicator as in like the discount to net asset value.
You don't want to see that decreasing.
The discount to NAV, I think there's another take that's like, well, at some point, maybe you imagine this thing is safe and you want to buy. You can buy GBTC, sell spot, and then just play the convergence trade. This is like maybe another pod topic.
Well, can I say one thing on that? Like I saw Hal Press mention that. He's like, I'm buying 40%. I think, 3 years till GBTC turns into an ETF, discount closes, you're looking at an 8% annual return. And I'm like, 18% annual return. Like I'd rather buy buy real estate. Like,
right.
What are you talking about? This is not
risk to go to zero doesn't exist in real estate.
Granted, you still have liquidity in that trade. Like he can trade out of that if he wants. So like, you don't have the liquidity risk premium there. But like, I'm like, if I want 18% annual returns, I'm going to go invest in an apartment complex or something.
Fair call.
Yeah.
I think not that.
I need the number to Hal's drug dealer.
Yeah. Hal Press is
smoking some
Hal's been wrong.
high quality shit.
Hal's been wrong just like left and right
months
over
here.
the last like 2 weeks.
Yeah, I mean, I think he's good on like fundamental. He was the first person to like literally listen to the ETH dev calls. He was the on point on the fundamentals of like when the merge is going to come. But yeah, maybe a good time to talk about him because like I think we disagree with most of his market calls, and I think he might get smoked over the next few months.
I mean, credit where credit's due. I mean, he nailed the ETH merge trade.
But little
very
did he
well.
know that was
Nailed
because
it
of
on
net liquidity dynamics,
Hold
not the
on.
merge.
It's a good question though. Yeah,
What do you mean he
sort of
nailed it? Like he was on Bankless. Like I listened to his Bankless episode. The Bankless episode is titled "I'm betting my entire fund on ETH." Prior to the merge, what's ETH done prior to the merge?
Round tripped.
How's his fund doing?
I mean, listen,
That's a good
like
point. Well, he did make he was pretty sharp in that futures spread actually. That was a good trade. That was maybe the trade of the year that I've seen. That was free money. He bet on that kind of displacement in the ETH futures as a result of the proof of work.
yeah,
thing. There's like
no
just
character
massive-
comments. Just would love to chop it up about his thesis on the trades. I think we got some good counter arguments.
Let's get him on the pod. That'd be amazing.
I would love to talk to Hal. I don't know. I'm in his replies all the time. He's probably like really annoyed with me. But Hal, if you're listening, I love you. Don't worry. But yeah, as for Hal's GBTC trade, I mean, what happens if this thing gets unwound? They just liquidate.
Well, how much?
All the Bitcoins are released.
How much do they own? Like compared to like a Saylor,
Who?
GBTC.
Grayscale.
Oh, that's a good question. Actually,
We
I don't have
could look it up.
I don't have the exact
Sly,
numbers.
look it up.
It's not small.
It's not.
It would be a lot of coins released on the market. I think.
Yeah,
I think that's kind of a bit of a nightmare scenario if they like unwind and people just have to dump everything to kind of get whatever they can.
643,000 Bitcoins.
Oh.
That's a lot
Wait,
more.
643,000.
Oh, just
No, that can't be right.
Just 5 times what Saylor has.
Wait, no, is that right?
I just Googled it.
They have 5 times what Saylor has.
$10 billion.
Holy
Oh
crap!
my
$11 billion?
God. What's the meme? Like, what's the meme for this? It's like, oh, you thought that was the final boss? Oh, no.
Yeah. But I mean, they could do a full redemption if they wanted to. and just give relief to the investors so that their investors actually get the net asset value. Like they could do that. If they believe the ETF will not come, which I don't think there's any, it's not going to happen in a few years.
10 billion. So they're making 200 million a year then.
Yeah.
right?
Why would
At
you?
2%?
Why would you file for that?
No, yeah.
Jesus.
I want to do a deep dive on Grayscale as its own episode because I think it
million a
deserves
year
it. I think
to
there's a
just
lot of people that hold this shit.
hold
Well, I mean,
we don't know. We don't know
God.
what's going on.
There's an argument that this discount is what caused the whole thing. Like for Gensler
Totally.
to not approve the ETF and causing this discount for this trust, could be argued that this is what butterfly effect cascaded this whole series of events.
Yeah. Well, this discount was a premium for a long time as well. And that,
Good point. It was a premium.
that's what Three Arrows Capital was basically built on.
Right.
So you're saying that government regulation had unforeseen consequences that caused a ripple effect and distorted the market? That's so weird. Not see that coming. Anyway, last thing on my list was there's a lot of people like asking about who's next, and Jump Crypto is a in the crosshairs right now.
What do we know about them right now?
So can you describe the profile of Jump, what they do, what they're all about?
Well, Jump Crypto is like a subsidiary of Jump Trading, and Jump Trading is like an absolute, complete, gangster trading firm. It's just absolute monster, and as big as like Jump Crypto
So is that a prop desk, or is that like a market maker? Is that like a institutional trading platform?
I think they do prop. I think they do market making. I think they're pretty epic. Jump Crypto, like to go through their hit list. I mean, they got wrecked in Luna. They lost like $700 million on the wormhole hack.
And they just filled the gap. They're like, we lost
130,000 ETH. Just there you
2
go,
months
or
worth
200,000
of,
ETH. I don't know
cash
what it was.
flows, no
It was a lot. Huge investors in Solana. Maybe they're still way up on that though. But like the tons of entanglements just into the Solana ecosystem. They're very big in like Serum and just kind of like this whole narrative of bringing, trading into this world of like decentralized liquidity and oracles and whatnot. And and they are apparently doing execution for Robinhood, possibly custody for Robinhood. There's like a $2.5 billion wallet that's been getting passed around that people are saying is Jump, and some people are saying it's Robinhood. It's managed by Jump. The latest FUD is that there's some like possible Robinhood contagion. Like Sam owned like tons of
9%.
Robinhood. Was it 9%?
9% of Robinhood's
9%
common
Robinhood?
equity. That's fucking huge.
So that's bad, but also Jump. I mean, this is totally unconfirmed, but there's a rumor that like they were using FTX for execution and they pulled hundreds of millions out right before the crash. And we were talking about like clawbacks, right? That would be like a prime example of something that gets clawed back. Like if some
In bankruptcy
huge,
proceedings, you're
it's
saying.
like some huge firm that had material information, which they probably did. They're so intertwined with Alameda and FTX. Like they would have to like give a chunk of that money back. And then if that money is like actually partially Robinhood users' funds,
Wow, so this is fascinating. You have Alameda, who's a big market maker. You have Jump, who's a big market maker. And if they are not closing spreads, closing bids and asks, you have like an order book that has no depth, which means is like little moves can cause a lot of volatility. But we haven't seen a lot of volatility in the last couple of days. So it doesn't necessarily mean it can't happen.
Yeah, I mean the price movement relative to the volume has been like the books are wildly illiquid right now.
Right.
Like the liquidity is like a fraction of what it was before. So
Buy everywhere.
yeah, I mean you could get some wild moves for sure. Like that's one of the main issues with the space right now. And when will that return? I don't know. I think Robinhood users will be fine even in a worst case scenario. Like even if Jump like lost 400 million of Robinhood funds, I think Daddy Jump would just, like I think their whole crypto arm is like a little like it's a cute little like interns project, even though it is burned like it seems like it's burned like $1 billion this year.
9-10% SPF thing though.
I mean, that's like he'll just sell those shares. They'll just get sold OTC.
But did he buy those OTC? Buy those like open market? Because like if you follow his previous Ponzi-nomics, it was like, I'll invest. You put your liquidity on my platform to fill my fucking gap of customer funds that I literally wasted. You know, I need your liquidity. If you follow the Ponzi-nomic, pattern.
Like what's Robinhood stock doing over the last 14 days?
It's not.
He's like, hey, put your
good.
deposits over here. I'll buy 9%. I don't know what that transaction looked like. I'm just talking to my ass.
Yeah,
but
I mean,
that's what-
Robinhood also has been sending out these sketchy looking like, give us your crypto emails, where they have these like huge hands like holding like these coins, and people are like, it's like, but it's just got these kind of like vibe, like these bad vibes. You're like, hey, why aren't your coins with us? Please give us your coins because we're great. You know, it just doesn't. It's probably just like terrible messaging, but it's not a good look right now with what's happening. But yeah, so there's some serious rumors swirling that there could be. I mean, obviously Robinhood getting caught up in this and losing hundreds of millions of user funds would be very, very bad. I doubt that'll happen, but like,
that would be so bad. That was my only like hope was Robinhood.
What inning do you think we're in the full like unwind of this?
seventh inning stretch.
Yeah, I mean we're close
like,
to the end. Like,
all right, let's.
I mean, I'm gonna try to follow the net liquidity dynamics. I think like we're due for a real capitulation, and so, if you go on the time scale, like I think you might have to return bullish in the next 1 to 3 months, based upon net liquidity and based upon the fact that like the economy hasn't really, consumers
bullish
earnings.
equities maybe. I don't think crypto gives a flying fuck about net liquidity right now. Like you could have a dynamic in the next month where stocks go up like 10% and like crypto loses half.
I think
of
this is what we're talking about, is that liquidity has been sucked out of the system, but price hasn't necessarily totally taken that into account yet, and that's what we're.
So it sucked out since when? Like what
do you mean? In the
talking
last
about?
week, in the last
Like
7
the
days,
FTX
yeah,
stuff and everything.
absolutely. I mean, some money was just evaporated, but
I mean,
also money
we nuked
pulled out.
we nuked like 30% of the entire crypto market cap, didn't
Right.
we? And like, which is a lot, but like maybe it
Perhaps
should
not
be
enough,
worse.
Not enough, perhaps.
There are some whispers that like large players like CZ and some other mega whales have like potentially known this was going to happen for a while and have potentially been like sitting there with a big net under the price, just scooping up cheap coins.
You could argue
right?
that CZ was the catalyst for a lot of this shit. I mean, like not the cause, because obviously SBF was doing fraudulent shit, but then CZ was like, well, fuck around and find out.
You could argue that FTX, Genesis, and Jump were the big boys who were supposed to be the put, to buy that dip and hold the price, and they're maybe not there anymore.
Yeah.
Okay,
Yeah.
let's continue to who the final
Let's
the
do
bosses,
it.
the final bosses.
One side note on CZ. Apparently, he just floated the idea of him buying up all the Genesis debt.
I saw that.
So, take that with a grain of
He's
salt.
already
but
floated the idea of buying up other liabilities, and he said no
gonna
thanks.
buy the whole space, I guess, and then we'll just all be Binance customers.
Oh, you mean another internationally based unregulated exchange? That sounds great.
It's also tiresome. Anyway, I wanted to talk a little bit about the final boss, possibly the Lord of the Cyber Hornets himself, Mr. Michael Saylor. The Bitcoiners seem to think that they're immune from all of this, like they're the chosen special coin. None of this contagion can hit them because like Bitcoin is great and everything, and Saylor is God, and he can't get liquidated because he's levered up responsibly. But a lot of chatter about this on crypto Twitter. His arrangement is quite complicated. Eric, I know you've been digging into this a little bit, so I wanted to
We're blessed
get
to have an equities
your
analyst
take on it.
on
What
the
are you seeing here?
Man, there's a lot to unpack here. So, like the way I'd start this analysis and the way that I did was like, you got to understand that MicroStrategy is a business first, right? Like that's an operating business. And then there's also a component of it that is like a Bitcoin investment company. And, I also want to disclaim that I'm not a specialist in MicroStrategy. I started looking at this yesterday. So I I think like I want to disclaim that, but here's the way I look at it. One is you have this operating business that's cash flow positive. I also think that like Michael Saylor himself, like I was doing a little bit of research on this guy. He's an impressive guy. He's kind of a badass. He's a savvy guy. Okay, so here's his background. He studied aeronautics at MIT, founded MicroStrategy in 1992 with another MIT guy. They grew that business. Their first client, this is like a business analytics, business intelligence like company. Their first client was McDonald's. They've grown that business substantially despite Bitcoin. This is all previous to any Bitcoin investment. I just quick Google search told me that their first Bitcoin investment was in August of 2020. Previous to that, MicroStrategy was trading at $1.3 billion market cap. So this is a big business that he built from the ground up to $1.3 billion. He's a savvy guy. And I have like many examples of the way that he is savvy in like capital raising and like the way he's operated his balance sheet as well. But for the purposes of our conversation, the purpose of our analysis is going to be talking about the Bitcoin side of this company, because that's what we're all worried about. We're either Bitcoin holders or crypto holders, and we want to know like this final boss, is he at risk to be liquidated? And if that's the case, then like full goblin town, right? So, I mean, I have a whole page of notes here. I don't want to go just all at you. Do you guys have like any research that you have done on your own before I dig in?
My understanding of what happened here is that basically he issued convertible debt initially to buy the Bitcoins. So in December of 2020, he issued a 5-year coupon bond at 5-year bond, 0.75%. When the stock was trading at $398, and it had the option to convert at a 37% premium to the stock price, or maybe the stock price was.
It was actually lower, and the conversion price is $397.
Yeah, I got that backwards. So the conversion price was $397. Stock was trading lower, so it converted a premium. And then he oversold that, ended up bringing in like $600-ish million.
So can I step in real quick?
Yeah.
Like, as a provider, as like a lender to that bond, why would I want to take that bet? Like, why would I want to give Michael Saylor money?
So I thought about like the moment that I saw, because he did 2 rounds of this convertible debt, and the first one, like Steven said, was issued at 0.75% interest, and the next one is issued at 0% interest. So like that really makes you question, like, why would any investor want to lock up their money in this like debt investment for any period of time at like a effectively 0% interest rate? And the way that I've like processed it is one, that's like very savvy by Saylor to do. He raised $1.65 billion at near 0%, like a weighted average of 48 bips that he's paying. Free money. Like, so awesome for Saylor. Like, you get free money. That's savvy. As an investor standpoint, I also get it. I remember at the time that I saw this, I was like, what a fucking scam. Like, why would you ever put your money in this? But like, hear me out. So if you're bullish on Bitcoin, but you're a risk-averse investor, like any bond investor, we're talking about fixed income here, like any bond investor is already risk-averse. So they don't want to participate in any Bitcoin downside. So they don't. Like they put their money with MicroStrategy. It's a debt, so like they'll get their money back at maturity so long as MicroStrategy is not bankrupt. And they get this like free call option on Bitcoin upside in terms of MicroStrategy shares. And here's where it kind of like went wrong for them, is that like, their convertible price is at $400 on the 2025s, and the 2027s are at $1,400.
Wow.
MicroStrategy shares are at 166. Like,
so they're currently underwater.
Yeah. Like there's literally zero chance, in my opinion, that like the 2027s are going to make any money.
So,
but like, what's the alternative? You could invest in Bitcoin and be down 70%.
So if I'm a fund, if I'm a family office or a hedge fund or whatever it may be, and I have a very limited investment scope, I can invest in debt, I can invest in certain types of securities. I'm not allowed to invest in Bitcoin. You're telling me that this might be a palatable option for a call option on Bitcoin while not going outside my investment scope.
Right. It's a free call option.
To call, yeah.
You're not paying any premium. Like you're getting your principal back at maturity in the event that MicroStrategy is not bankrupt. So I actually think it's a fair trade on both sides, but like I would never take it myself. I think it's ridiculous. But I also think that Michael Saylor is like incredibly savvy to orchestrate those two deals.
This was very popular in Tesla. Tesla raised money this similar way as well. So it's not like a super uncommon, but it's
attractive for a CEO because you don't feel like you're like selling equity. You don't feel like you are like diluting your shareholders, and it kind of feels like a free lunch. But it can very quickly turn into not a free lunch, right? Because like other bonds, right? The bond trades at a price that is sort of like a function of like the credit risk, the interest rate, and the convertible notes like have this other element of the price, which is like, what is the stock trading at, right? Like if that bond is able to convert into like equity at like a super attractive price, then the price of the bond reflects that, right?
Right. And at the time that he issued the second one, right? This was like the 2027 maturity, like MSTR shares were at 900.
Mm-hmm. Wow.
Yeah.
So like to bet on 1400,
50% premium to the share price.
Well, a free upside, you know, like I think it's like, at that time, it didn't sound so ridiculous, and Bitcoin was pumping, and now it sounds ridiculous. Now that Bitcoin's down 70%, but like at that time, it was like, oh, okay, well, let me try to get a little free upside on Bitcoin.
All right, so let's talk about these first two loans because there was another one.
No, there's two more after that.
There's two more.
Yeah,
I thought there was one more. Okay, so let's focus on these first two. Can these two go bad in your mind?
In my mind, the first two are very safe. Like from the perspective of Bitcoin holder and like MSTR equity holder, like from that perspective, like if I'm sitting here as like the convertible debt holder, like it's already gone bad. Like these things trade thinly, open market. Like no one in their right mind is going to buy this convertible debt off somebody else right now because you just rather buy Bitcoin. But like they're already trading below 50 cents on the dollar right now. So like it's already gone bad for them. Like, but from the perspective of like Saylor himself, I think these two are safe. Where it gets tricky, where it gets a little more interesting is on the next two.
But can you maybe describe why you feel it's safe?
Yeah,
like,
yeah. So here's the deal.
Specifics?
So here's the deal. MicroStrategy has 4 debts outstanding, 4 different liabilities that they entered in an agreement to. That totals $2.3 billion. And I'm rounding here, but like $2.3 billion total. The first two represent 1.7 billion of that 2.3. So it's the vast majority, right? Like the vast majority of this is this convertible debt that you're paying effectively 0% interest on.
There's a fixed interest rate in this bond, obviously, right?
It's a fixed interest rate, and that interest rate is 0. Like I'm going to call it 0. It's 48 bips, but it's like you're paying nothing. You're paying nothing on $1.7 billion. And, your operating business, like MicroStrategy itself has an operating business. That operating business is cash flow positive. In 2021, it made $100 million in operating cash flow. In 2022, like economics are weakening.
I want to bring that up later.
Yeah. So economics are weakening, but they're still cash flow positive in 2022. Trailing 12 months, they're still like $25 million of operating cash flow positive. So like, those two liabilities themselves represent very little risk to me. They represent upside to the holder of the debt, but that upside is now almost evaporated because the share price has gone down. So, like Saylor is kind of dancing because he's like, well, I don't owe you anything. You gave me your 1.7 billion. Call that good for now.
So I can see how you might think it's maybe not that much of a risk to service those debt payments right now because there's cash flow and it's a fixed rate and, they expire not too far in the future. But I think the problem here is like any other bond, right? They're sort of priced proportionate to like the credit risk of the party. And the credit risk of MicroStrategy is effectively like directly tied into the price of Bitcoin at this point.
I don't think so, but
so
I'm curious.
I want to say that just for those two, there's two more, and what you're describing is directly applicable to the next two.
Okay.
Well, I think the first two, I think the first one is interesting, even though it doesn't have like a collateral requirement to it, because my understanding is that there comes a point where like the credit risk on the bond gets to such an extreme distress level that MicroStrategy starts having this obligation to service like the creditors of this debt over like other considerations in the company. And at a certain price, right, at a certain low price, the price of the bond sort of transitions into this like extreme like negative gamma position where it creates this like nasty reflexivity. Because if the price gets too low, like normally people might go and like hedge out in the market, but at a certain point the liquidity dries up, and then the people just start selling and the price gaps down, and then that ultimately forces a situation where the board maybe has to like sell some Bitcoin to boost up the credit status of my, but that drives the price of Bitcoin down more. No.
Like if you're MicroStrategy, what do you give a fuck about the face value of the bond? Like who cares if the value of the bond goes down? All you care about is, can I meet those interest payments? And if they're near zero and the business is still cash flow positive, you don't care if you're MicroStrategy.
Precisely. What you worry about is, can you repay the principal in 2025? Because the $650 million cash outflow is due 2025. And like, I don't know that MicroStrategy can meet that, and we'll get more into. 2025 is going to be like a very important time for them as we proceed.
Well, I would suggest people look up Michael Cow has a whole thread on this, and he has put forth a case that basically says that the theory that they simply have to meet payments and everything is okay is actually not correct. Like there's some language and securities laws and all this stuff where like the bond can reach a status that is just so distressed that like the company itself has to.
I want to provide a little color there because there is a liquidity provision on the second bond. The $1 billion bond due 2027 has a 25% liquidity provision on the principal of the loan. So it's $1 billion loan. They need to maintain at least $250 million liquidity, but they're like so far. I mean, they're at $2 billion right now. So I mean, we're talking about a 90%
Bitcoin value.
Yeah, we're talking about 90% drawdown from here. For that to be a factor on those first two.
What do you make of the fact that as of today, I think MicroStrategy actually has like net negative enterprise value,
equity value. They have negative equity value. That's like the book value from an accounting basis is negative. This is something that if you like look at distressed investing, it's not uncommon. Like frankly. Like the Alfalfa podcast has a negative equity value right now because we've
shots fired.
We've like bought equipment and like the equipment can't be resold for the same price that we bought it. So like at the end of the day, like we have a negative equity value. It doesn't like necessarily hurt the business so much. It's like if they don't need cash flow, it doesn't matter.
Can I bring up a point? It seems like there's a financial reporting requirement when it comes to these assets where during the quarter you have to report the lowest point of the asset. So the lowest point of Bitcoin, not the most recent.
Yeah.
And there may be requirements in the future to change that. So is that affect this enterprise value?
That's exactly what's driving this negative equity value is that you have to report, because they report Bitcoin as an infinite lived intangible asset. And the way that you report that, or the way they report that is by putting the lowest price it's ever been. And then you impair that asset to that price. And you can never revalue it higher.
You can never revalue it higher?
No.
What about in the subsequent reporting period?
No. It's just so, like in the future, this thing might be extremely positive in terms of equity value, like in real life, but on the accounting, it'll be negative.
Just for that quarter?
No. Forever.
Really?
And I've read that Michael Saylor has like forecasted that maybe in 2024, 2025, there's updates to this like reporting type requirement. But I would file that in vanity accounting metrics. Like,
totally.
Yeah, like not I guess directly relevant to our bags potentially.
Yeah. And I think like when you like dig deep into like company financials, what you find is that like the FASB accounting version of it doesn't match with like the realistic version of what a company looks like. And that's sort of your job is to like understand the difference. in this situation, I don't think that the negative book value of equity really matters too much.
And it sounds like you also don't think there's going to be a point where the bond gets so distressed that the board or something is sort of like forced into de-risking the portfolio a little bit.
If you get close to that 2025 point and there's not cash on hand
Absolutely.
to service that balloon payment that is due, then I think what the scenario you're talking about, Stephen, is where the board has to basically change strategy based upon this bond that they owe a balloon payment on, is when it gets closer and closer to that period.
Oh, right? I think like if I was CFO, I'd be positioning to sell Bitcoin even now. But like we're talking about like bankruptcy here is like
what we're worried about.
Yeah, that's like the analysis that I'm coming.
Yeah,
with.
we're worried about any sort of forced selling on the Bitcoin price, which may kick off like a cascade of sorts. Yeah.
So when we get into debt number 3 and number 4, that's where
let's go there.
Let's go.
So okay, debt number 3, I would put in like so 1 and 2 are savvy, like great move by Saylor, incredible. The fact that you can get $1.7 billion for free, incredible. The next one, like I think this is exemplary of what happens in finance in general, is like you start with something really good and then you get a little greedy and then you want more of it and then you want more of it. And like, then that turns out to be kind of bad. And that's probably like what happened with SBF. It's happened throughout the history of finance. So Saylor's third debt was $500 million, due 2028. And he issued that at 6%. And that's a fixed rate, but 6% is still pretty high. And he used that to buy Bitcoin. And that was when Bitcoin was, I think he issued that when Bitcoin was at 40K. And now Bitcoin's at 15K-ish.
What a trader.
So he's, well, you know, I'll actually back him up on his trading. Like one of the ways that he collateralized all of this is actually that he made amazing trades. And this is a bit of a digression, but this is like, so in 2020, he repurchased 1 million shares of MSTR, you know, just in treasury stock. And then 1 year later, sold it at 700. So he bought at 140, sold at 700. That gives him all this cash.
He's good at trading his own stock, I guess.
I mean, that would make George Soros proud. Like that's a great trade.
Good trade. Got to tip your hat.
It's a good trade. And like, that's part of the reason why a lot of this stuff is safe, because like, this is not just fully levered. This is like capitalized by his own balance sheet for the most part. Now when we get to like the shady stuff is like number 3, I'd still call this like okay risk. Number 3, debt number 3 is $500 million due 2028. It's 6%, like I said. It's secured, but it's secured only with, and this is stipulated, secured only with new Bitcoin. New Bitcoin meaning that was purchased after that debt issuance. Okay.
So this is where the MicroStrategy comes in, the MicroStrategy LLC.
Okay, so like this is the convoluted part. Like I only started looking at this yesterday. Like I'm not so deep down into it, but they did create subsidiaries that hold specific levels of Bitcoin that are tied to these debts. But like, you know, I don't know.
Yeah, like I think like what you were saying, like normally the initial Bitcoin might be subject to like liquidation or something in the name of this loan. But when he made this loan, he did specifically exclude that original Bitcoin
Precisely.
From it, siphoned it off into another entity called MicroStrategy, and this is now sort of isolated from this particular loan.
So when you say secured by only new Bitcoin, does that mean is not secured by the equity of MicroStrategy?
Not it doesn't, like I didn't see that.
I don't think he can become a forced seller of the initial Bitcoin if this particular loan is.
It didn't.
But he could be a forced seller of the new Bitcoin he's bought since.
Yes,
but I also think that any of these debts can be secured by, like at the end of the day, in a liquidation, like these guys are all privy to the assets that this company holds entirely, like so operating business.
Finance 101, bondholders are first right.
Yeah, they have hierarchy. So I think at the end of the day, your question is, do these guys have?
This is interesting because, you know, like cash on hand as of September was 60 million.
But cash and receivables is like 200 million.
Yeah, exactly, more. But, you know, as of in the last 12 months, they've only produced 25 million from operating cash flow.
Yeah, but
you know,
okay, so you create 25 million of operating cash flow. Your interest payments are something like 35 million.
Exactly.
So you have like 10 million shortfall, but you have 200 million in cash and receivables behind it. Like that gives you a pretty good buffer to be able to withstand, many quarters of negative. I'm not too worried about that.
Okay. All right.
I'm not too worried about that. Like I'm talking about number 3 here. Debt number 3 is 500 million due 2028. Here's where I think it gets a little hairy, is that there's a spring forward provision in this debt due 2028. And that's if they have a liquidity requirement of 130% of the loan value. So that's $650 million they need to have liquid. And if they're below that, then that springs forward the maturity from 2028 to 2025. And 2025 already has the 650 due. Debt number 1 is 650 million due 2025. Debt number 3 is 500 million due 2028, but they can spring it forward to 2025 if they're not.
So you're talking about 1.15 billion potentially in 2025.
Due in 2025. 1.15 billion due 2025 cash. And that would be hard to meet if Bitcoin is considerably lower than we are now.
And that would happen if he doesn't post sufficient collateral for that last loan.
Right. But so, they hold 130,000 Bitcoin. So they hypothetically would be able to withstand a drawdown to $650 million total liquidity. I think that would be the equivalent of like, I think 5K price on Bitcoin, but it does get pretty hairy when you get
5K is hairy.
5K
it's hairier than people
It's my understanding that like something like 95,000 of those 130,000 Bitcoin are unencumbered, meaning they're not part of current collateral, which means they could post that 95,000 Bitcoin as collateral to save themselves to push back to the ultimate maturity date of 2028.
Okay, so let me continue down to number 3, number 4. Like 3, we've already talked about. Number 4 gets even hairier. 4 is down. Like first 2, great trades. Third one, fourth one, this was a mistake. Okay, so this is only $200 million, which it doesn't sound like it's only 200. But on 2.3 billion, this is like icing on top of the cake. But this was a deal that was initiated with Silvergate. I'm not familiar with this company, but
if you're a big crypto company, Silvergate is one of the only banks who like let you transact. Other Bank of America, JP Morgan will not necessarily let you transact in the crypto.
Okay, so I think Silvergate got the best of them here. This loan is so it's 200 million, fully secured, at a floating rate. The floating rate is the 30-day SOFR plus 3.7, which today is at 7%. And like we can imagine that rate's probably going higher.
Plus SOFR plus what?
3.7.
Oof.
So it's 7 now. It's like 7.1 now.
Yeah.
And that rate's probably going to go higher in the near term.
For sure.
So that's going to sting. And the part that's going to sting worse is that has a 50% max LTV, meaning he has to pony up 2 times the collateral on that loan. So he took 200 million out, and he's got to have 400 million of collateral at all times with them. Otherwise, he's in violation of the debt covenant.
But wait, and then he also has to have collateral on loan number 3 separate of that?
I think they can just commingle. Like as long as he has 650 million on number 3, I don't think that he has to assign them separately.
Wow.
But does that mean he has to have like about $1 billion in aggregate?
I don't think so. I think he has to have 650 million total, because that's my understanding. But again, I've done this for 24 hours.
Yeah, but I mean, as like a company who's taking out lines of credit and stuff like that, like you have to report your finances, and typically like you have covenants to meet, and you just report your finances to each bank, and as long as you meet the covenants, it's all good.
Right. So my understanding is with loan number 4, he actually does assign collateral to that loan, but I think that 400 million also applies to the 650 million of liquidity needed for loan number 3.
So it just has this generalized liquidity. That seems like odd that a lender would allow that. But
that's my understanding.
I mean, in all their language, they have like we are the not subordinate, but like we are the last loan. Like we get first right in all the loans, but like in court,
is there a spring forward provision in the 4th loan?
No, there isn't. No, there isn't.
But something could go bad in loan 4 that maybe triggers loan 3 and causes this. So how do you see that maybe happening?
This is where it gets crazy, I think. Like in a scenario where loan 4 is the riskiest, so they at initiation, they deposited $800 million of Bitcoin. So not 800 Bitcoin, but like $800 million worth of Bitcoin. That was like 20K Bitcoin at the time. Bitcoin was at 40K. So they deposited 20K of Bitcoin to collateralize this loan. It was way over collateralized, like 2 times over collateralized. Then Bitcoin price dropped substantially and they had to top up, like they basically already got margin called essentially. So, their collateral value was down to 300 million. They were in violation of the covenant already. So they put in additional 10K of Bitcoin. So they're in for 30K Bitcoin already on this 4th loan. That value today is worth 500 million. Again, they have to maintain a $400 million collateral value. Bitcoin price is not going higher. It's going lower. So like they're going to be probably in violation again.
Probably post another 10,000.
Post another 10,000. But they only have 130,000 Bitcoin of ammo. Like they can't just like keep going.
Or 95,000. I mean, this is like currently unencumbered,
right?
Yeah,
they've already exhausted so much of it. So they can't just do forever. But like I think people who are like on Twitter, I'm saying like, oh yeah, well he'll just post more Bitcoin and collateral. It's like, well, eventually it dries out.
But so let's say he even has to post another 10,000 or 20,000. Then he's down to 75,000 unencumbered Bitcoin, which, at some point, may not be worth as much, but it's still quite a bit of collateral to post. And that is only the Bitcoin collateral they could post. There's certainly cash that they could post, but
they have some, yeah.
Cash on hand is only 60 million. They have a ton of AR, call it like 200 million.
Yeah.
So there is cash to post. My question is like, when this balloon payment comes up of like 600 million
in 2025,
2025, I mean,
assuming no spring forward on debt.
Yeah, let's say assume no spring forward on the other one. Like, were they planning? You think they were planning originally to sell Bitcoin in order to meet that balloon payment? Because where is that? Where's that cash?
They're not ready as of now to meet that payment whatsoever. But like here's what we say in crypto: like a week is like a lifetime in crypto. 2025, who knows what? Like
money printer could be back on.
Where's Bitcoin in 2025? Maybe this is all an afterthought.
But they could be liquidated before. What is the price where even before then, like this whole daisy chain happens?
My point is like, forget even liquidated. Like, let's say they just everything goes fine, no liquidations, no stress. They still owe 600 million.
2025
in cash. Yeah. So at that point, even if Bitcoin is back to 40K, they still got to sell quite a bit.
This is like, like publicly traded companies basically live in this realm of like having debts due, and
I
they
guess
never
you could
pay.
they
literally never
pay.
Okay,
so I was gonna bring that up as a person who's taken out lines of credit. The number one thing that a bank does not want to do is actually put their client in default. Like they do not want to do that, because what that results in is, hundreds of thousands, millions of dollars of legal fees to try to claw back potentially illiquid assets to pay themselves back. They know reasonably that the best way to make sure that they get their money back is to restructure the loan. And they are usually more than willing, especially with large amounts, to say, let's restructure this loan based on your financials. What can you do? Okay, you can do this, then we'll restructure the loan this. We might have some different additional covenants you might need to increase, but like restructuring is a 90% probability if they get a hint of distress. Would you agree?
Totally. And even I would say that the highest probability is that in 2025, there isn't even distress. Like they could just roll the debt over. They'll just like reissue. They wouldn't have to restructure the 2025. They just reissue.
Maybe at a higher interest rate, but
fine.
They roll the debt.
Yeah. And they're like betting on Bitcoin anyways. What happens if they do 5 more years? Where's Bitcoin at 2030? Like probably no problem.
I feel like my bigger concern is like the next 12 months.
Okay, exactly. So I think like I've my little notepad here finished with this little area called "Where do we stand?" Right? Like where is the problem with MSTR and their Bitcoin holdings? I think it's at levels of Bitcoin price. Like if Bitcoin price goes below 5K, well then we're starting to be very worried that like additional $500 million can be due in 2025. But still, like Nick says, we have outs. There's outs there. At 3K Bitcoin price, they have no more ability. They have no more collateral to be within their debt covenants on debt number 4. that would be a problem. I think if they're in violation of their covenant on debt number 4, which is like the smallest of all of them, right? It's 200 million on 2.3 billion, but they just got too greedy. They fucked up. They went for this debt number 4. If they're in violation of debt number 4, then I think it starts the cascade of the entire unwind, where it's like they can't they're out of options. Like you can't reissue new debt because no one's going to buy it. You can't sell your equity because the equity price is going to be in the tank. Like that's the cascade. If Bitcoin price goes that low, Saylor's thinking like, well, that's our margin call price. I think he's right. Like that's the margin call where you can't pay.
Right. So
3K.
But at that point, he can still restructure. There's still outs.
There's still outs with the bank on restructuring the deal. But like I don't think that that doesn't help his like balance sheet situation.
The finances of the company could be in like absolute shambles at that point.
First of all, Eric, this is fucking phenomenal analysis. Like I know you've been reading 10Ks since we've been in college together. So I know you had plenty of reps at this. So this is phenomenal. So is the question, and so I did a little red team analysis before. I didn't tell you, but there was another analyst from BTIG. His name is Mark Palmer. He arrived at essentially the same conclusion you did. He says that at 3,500 is when the company will run out of Bitcoin collateral.
Yeah.
So there's our marker.
Yeah, and this is scary to me, like as like thinking like a trader, because like I think the price is going to 10, 11K already. I feel like that's like priced in, and then if we go a little below 10K, like he's got a huge bullseye in his back. Like once we get to like 7K, I feel like the market is just going to sniff out his liquidation point.
Then you get like the behavioral bias, the fear. You get like the there's a lot that can happen in between 10K and 3K.
So once we get to 4 digits, the market then like lasers in on this $3,500 price. And my question is there enough sharks in the tank to smoke out his liquidation? Because like if FTX isn't there, if Genesis isn't there, if Jump isn't there, if 3AC isn't there to like smoke out his liquidation price, is there going to be the players to manipulate the market enough down to make him capitulate? Because if he capitulates at 3,500, I don't even know what the fucking price goes down to at that point.
I don't even think it has to be like there's this popular notion that there's these whales manipulating price. I think you can make an argument that just that the market just has this collective consciousness where it behaves in a way that's sort of rational for the collective market as a whole. And if like the market thinks this liquidation is there, it might want to go there. And it's like, I know it seems unimaginable to people. It's not that crazy of a price. It would just amount to us like returning to the bottom of a range that's a very stable level of support for Bitcoin. That was the price of Bitcoin like pre-COVID. That wasn't that long ago. We're just very anchored to that other price.
I mean, from a business owner's perspective, like I actually feel pretty good about his debt structure. Like I don't actually think it's that bad because, generally when you have a line of credit, it has a due date, when this line of credit is up. But like if you have good general relationships with your bankers, you roll it forward. And if you want to tell that banker to fuck off, there's probably another banker who take that same loan and take on that debt, buy that paper, and you continue rolling over the debt. So when it comes, the only thing that worries me is that the balloon payments, but like Eric said, you have restructuring or just rolling the debt forward. So I feel pretty good that his liquidation point is 3,500 and there's still outs on the way down.
That's how I felt too. Like I came into this analysis thirsty for blood. Like
you were looking for it.
I wanted more short targets, and like I went through this exercise. I was like, not as juicy as I would have hoped.
All right, so my public calls for the death of Saylor are probably going to go unfulfilled, but I guess.
I do see what you're saying. When you hit this 4-digit mental milestone,
it could be tested for sure.
It's going to get very scary very quickly, I think.
If we get there.
Yeah, so how any of this actionable? Are you playing this at all? Like how are you thinking about MSTR's role?
Not really. I'm just mentally pricing in like a tail risk that I think is a lot lower than a lot of people have priced in, but it's probably not going to stop me from, averaging in and everything. But it would stop me from doing things like taking leverage at the bottom, just because I don't think the floor is like this like 10K, 11K price like a lot of people seem to think
here's a wild thought I had. Let's say Bitcoin goes down to 10K. It's typically like a safe. There's a lot of liquidity at that price. you might be a fan of ETH at that point. I hold Bitcoin. One wild thought I had was like, well, I could take, 20, 30% leverage at Bitcoin at 10K, use it to buy ETH at a potential bottom price. But understanding these dynamics, I mean, I don't think I would generally take that type of bet. I don't want to be a force.
Hold Bitcoin.
Because I hold Bit, I'm going to keep holding it, but might as well maybe pull out some debt against it, a low level of leverage, 20% maybe, and maybe just lever up my ETH position and feel pretty safe at that. But given these dynamics, I think originally I probably wouldn't do that, even though it's a wild thought in my head. It's tempting, but maybe given this dynamics, I just don't play with that at all.
Not recommended. I'm sort of the mindset right now that the bottom is a lot closer than people think and a lot sooner, or beyond what people are sort of mentally
end of next year, the bottom could end up being is what you're thinking, or
and very low, or even in bottom in 2024. There are ways that macro could play out that are very bad, and then there are black swans in crypto that could arise simultaneously. There's a lot here, but we can get into that discussion another time. I think that's been a good, long, and thorough conversation.
Yeah, I mean, that was the most informative thing I've heard about this thing, because I've heard a lot of vagary on crypto Twitter about MicroStrategy, Ultimate Boss, say they're going to get liquidated, but no one ever came with the goods. With the receipts.
I don't think it's going to get liquidated. I've been selling puts on MSTR way out of the money weeklies because I don't think it's going to get liquidated by Friday. And I'll just roll that over, and I'll just put the proceeds into ETH, essentially. So,
what's your juiciness factor on those?
Oh, they're juicy.
Okay, all right.
I'm going to sleep.
Armand
Literally been dreaming about my bed.
He is still here.
I am still here.
It's more a decoration at this point, but
we give him fucking A+ effort points.
That was very good, guys. Absolutely amazing. Final reminder, link below for 8 Sleep. Use code Alfalfa, and I'll see you guys in bed. That was nice. Bye.
Bye.